The FY25 budget, if you look at the grand scheme of things, this was always part of the IMF program. Of course, if these things don't happen, if they're unable to widen the tax net as they're planning to in the budget, then naturally the burden will shift to the salaried class and your corporates. So the FY25 budget, if you look at the grand scheme of things, this was always part of the IMF program, right? I mean, this was meant as a precondition. And if you look at prior cycles, the emphasis of the IMF has usually been on interest rates and exchange rates to start off with. But this time around, because interest rates were already at all-time highs and the currency had already adjusted, there was a clear focus on tax revenue, privatization, energy reforms, and I think the budget FY25 is part of that same chain. And so there was always that expectation that this budget is going to really focus on taxation, and that is exactly what we've seen come through in terms of the more than 40% increase that they're targeting for tax revenue, because even the finance minister has pointed out that Pakistan's tax to GDP needs to raise very, very quickly. So there was always the feeling that taxation would increase, but I think what's come as a pleasant surprise is that unlike past years when it's been very easy to tax the already taxed, for instance, the salaried class. I mean, not to say that taxation, the effective tax rate for the salaried class will not go up, but it will go up modestly and I think bearably. And there has been a genuine effort to go after the undocumented sectors of the economy, especially the non-tax filers, as well as to an extent the retail class, as well as the real estate sector. So that's a bit of a pleasant surprise to see the focus come through there. So no surprises as to the ambitious targets that they've set. Clear focus on raising taxation and tax revenue. But pleasant surprise to see that they've gone after sectors where there's been a clamor in the past for them to go after. So taxation was always going to go up in the budget, but we were pleasantly surprised to see the government go after areas where there's been a clamor in the past to get them into the tax net, but governments have always fallen short of that target. And so we've seen an effort to go after the undocumented sector, non-tax filers. I think its life has been made difficult for them, and they will be encouraged to file their taxes. There has also been a move to go after the retailers and the real estate sector to an extent. I believe it's the start, and that's good to see. And by extension, what that means is that the burden which has historically fallen on to the salaried class appears to have been avoided as far as this budget is concerned. Of course, there are risks, I mean, in terms of enforceability, and we will not be surprised to see pushback come from these sectors that have been touched in the FY25 budget. But really, the government needs to now hold its nerve and stay the course and get this over the line. There's been a fantastic response from the stock market to this. I think it's driven by two factors. I mean, the first one is that in the run-up to the budget, and at least in the last week or so, we've seen significant selling pressure on the KSE 100. And one of the reasons for that was there were fears in the run-up to the budget that the capital gains tax, on the disposal of stocks, or even the dividends that you receive from the listed companies, that would be significantly increased. And that was one of the reasons that was dragging the index lower over the last week. Now, that's not really materialized. And what we've seen is that for tax filers, the tax rate, the CGT on disposal of securities has been made uniform at 15%. Earlier, there were slabs in place depending on your holding period, but the impact isn't that much anymore. For non-tax filers, of course, there is a significant increase, but our understanding is that most of the people already investing in the stock market are within the documented sector. So that fear did not materialize. So the fact that this was something that was, worrying investors in the run-up to the budget has now resulted in a relief rally. But the other thing that investors are also looking for is, and that is something that I've alluded to, a little earlier, is that again, the effort to tax the undocumented sector. I think that's something that people are generally happy with. And thirdly, there is a feeling that in its current shape and form, this will be a budget that will be acceptable to the IMF, and this will help in securing the IMF program, which we so desperately need. and that will give us that macroeconomic cover and comfort, not just for the next few months, but for the next few years. And really, Pakistan needs that, macroeconomic comfort in order to, take things forward and for us to, take the economy in a new direction. So I think two things coming into play: the fact that CGT changes were not as harsh as previously feared, and a budget that, in its current shape and form, should be acceptable to the IMF. And there's been a resounding, the budget's been resoundingly welcomed by the market. It was up about 4.5 to 5%, which is significant. I mean, in a single day, that's a very significant sort of return for it to generate. So the market has voted with its feet. I mean, you can tell that there's been exuberance that's come through, and you can attribute it to the budget. Right. Look, the government's headline macroeconomic targets seem to be achievable in terms of at least the GDP growth. I think 3.6% GDP growth target for FY25 seems to be achievable. This is ballpark equal to the last 10-year GDP average in Pakistan. So I think it is achievable. Inflation, they might be a tad optimistic in terms of expecting 12%. They might miss that by a few percentage points. The fiscal deficit, of course, is key. They're expecting it to be about 5.9% of GDP, and that's a great function of if they are able to generate the revenue targets that they're aiming for. And before we head to the long run, we have to actually get this budget passed. And I would not be surprised to see pushback coming from business associations, exporters, especially, for instance, who will push back against the higher taxation that they will see in this budget. So the first challenge for the government is to get this budget through the line and get it approved, via Parliament in its current shape and form, or to a great extent, without changing it too much. And then the next would be to go to the IMF and take them on board and secure that IMF program. And if you're able to do these two things, and like I said, if the government is able to stay the course and have the political will to implement and enforce the budget in true spirit and form, then I think it lays a very strong basis for optimism in the economy. Because things have come to a point where we cannot afford to, not increase taxation. I mean, everybody has to share the burden. It cannot fall on only certain sectors of the economy. The fact that the finance minister has spoken about the need for taxation to be more equitable, I think certainly the budget is a step in the right direction. But they now need to walk the talk. The talk is all there in the budget. It's a good budget in what it strives to do and what it aims to achieve. But they really need to hold their nerve and see this to the finish line now. I think compared to previous budgets in previous years and the fears in the run-up to the budget, I don't think it's significantly deepening of the tax net. I mean, of course, the effective tax rate for the salaried class and the middle income will go up, but not to the extent that was feared in the past. So the effective tax rate for anybody who is salaried might go up by a few percentage points. I think that's bearable. In essence, it doesn't seem to be very inflationary. I mean, of course, we will see petroleum prices go up, petrol prices at the retail pumps, because the petroleum development levy has been increased. So you might see petrol prices go up by about 20 rupees per liter, all else the same. But it could have been a lot more inflationary. For instance, there has been no change in the GST rate. And of course, that is something that would have impacted everybody, right? I mean, it's a form of indirect taxation, and it would have been inflationary too. So I don't think that there has been that much deepening compared to the past budgets, and as much as what was feared. And there has been that effort to really go after. I think it's a very visible effort to go after non-tax filers. I think they will be encouraged to file their taxes, and of course retail and real estate, it's a start to get them into the tax net in a better way. So I do think there has been that effort to widen, and I think that's the key thrust of the budget. But like I said, I mean, the challenges and risks are there in terms of enforceability. Some of these things, especially going after retailers, have been attempted in the past, but the pushback has been too much for the government to bear, and they've gone back and taxed the already taxed. So Of course, if these things don't happen, if they're unable to widen the tax net as they're planning to in the budget, then naturally the burden will shift to the salaried class and your corporates. And so if there is that issue in enforceability, then don't be surprised if you see a mini budget 3 or 4 months down the road where they're having to scramble through and make up for the revenue shortfall through measures that they've relied on in the past. So as of right now, it looks as if the government is convinced that this is the way to go, and there is no other choice. But really, we will want to keep a lookout on the risk factors and see if the government is able to hold its nerve.